Hello and welcome to Bunnex Investment Group. Today we are going to talk about a strategy which mainly focuses on trading pullbacks rather than extremes. What do we mean? We mean whenever we have an uptrend, we'll definitely have a turning point to start going down. But for us not to focus on these extremes, we will rather be focusing on pullbacks. So it is true that trading at extremes poses a great difficulty. Therefore, this strategy will simplify everything. But before we jump into the whole video, be sure to check out our free signals Telegram channel. The link is in the description below. Before we go further, I'd like to give a scammer alert. Please do not fall for people who come in the comment section with WhatsApp numbers implying to be me. I do not share with anyone my WhatsApp number, and if you want to get in touch with me, do so via social media handles that I've put down below. So firstly, how do pullbacks occur in the market? For the market to move considerably, there must be injection of liquidity, and by liquidity we mean money itself. When a market maker injects huge sums of money through a buy, right, or withdraw huge sums from the market through a sell deal in a currency pair, the market witnesses a surge, that is a rise, or a crash, which is a fall, in prices depending on the action of the market maker. So with that being said, we should know that it is certain to get pullbacks within any market flow of any kind. So by knowing this fact, we have to create a trading edge around trading pullbacks. In a downtrend, we actually see a pullback. This is because from this point, we had an injection of liquidity, and at this point, we withdrew liquidity. Therefore, we can experience a surge or a crash within the market flow. So this strategy is for those looking to catch 50 pips and risking 25 pips. This alone is a 2:1 reward to risk ratio. So you are going to employ three indicators, which are the period 50 EMA, by EMA implying exponential moving average, and period 13 exponential moving average. Then last indicator is the Traders Dynamic Index, or the TDI. So below are the steps of the strategy. Step 1 is to see an extreme in the market flow whereby an M or a W has been formed. We are not interested in taking this setup because we want to increase our odds of success as well as simplify the process. So the first step is to see the market creating a nameable M or creating a nameable W, but we are not going to be interested in trading these setups when using this strategy, because we want to increase odds of not guessing where the market is definitely going to change direction. Then step 2, after getting the anticipated setup, which is a W or an M or a W, we will need to validate it using the TDI. This is done through the concept of divergence. As you can see, the first leg is shorter than the second leg, and on the TDI we will need to see, should be the first leg shorter, right, whereby we have divergence in this manner, and on W this first leg is shorter than the second leg, but on the TDI we have the first leg longer than the second leg. So we will wait until price breaks the crown line of the observed setup. So what is the crown line? Here is the crown line of the setup. Sometimes we will have the first leg, then a choppiness for several days, and then the second leg. So what we are now waiting to see is to see price breaking this crown line like this. That's the second step. Then on the third step, this is the last and final step, whereby we are now waiting for price to pull back to the crown line, and that is our point of interest to enter the market. We will need to see candlestick reversal pattern or wait for candle closure below the 13 EMA and enter our trade in the rightful market context. Let's see this on the charts. So this is GBP against USD, and we are going to do that those steps that we have already mentioned earlier. The first step is to see an extreme of the market. As you can see, this is an extreme of the market, and we had a nameable pattern. Validating this pattern, you can actually see that, and on the TDI there. So the second thing was to wait for price to break the crown line, which is this one in this case, and we are now waiting for price to pull back to that crown line and drop. This is what we are now anticipating. Then let's go on another example. You can see that we had a setup here, which is a W, and entering after candle closure above 13 was definitely going to give us our 50 pips. Also had a setup here, and this is to show you that it is possible to have a loss. So on marking out the crown line, we have to respect 50% of this candlestick and its wick. As you can see, we reached the crown line at this point, and candlestick closure below the 13 EMA was going to give us our 50 pips. And this can also be validated. As you can see, we had a beautiful divergence here. Then let's do another example. This is USD card. On USD card, we had this M, which was also a valid M, and let's mark the crown line, which is this. Then entering after candle closure below the 50 EMA was going to give us our 50 pips, right? As you can see that we have created a multi-wick W. This is now our crown line for the future price movement. We are going to wait, right, to see. We have the first step is to see price breaking that crown line and price retesting that crown line. This is another example on euro against dollar. As you can see, in the recent week, we had a beautiful M pattern that was issued, and it's also valid. It can be validated with the TDI. We had a break of this crown line, and we came back, and candle closure below the 50 EMA was going to give us our 50 pips. So basically that this pullback strategy will actually give you a very accurate edge within the market, but it will work perfectly if you only focus on it alone. If you have a several bag of strategies and try to incorporate this one into that bag of strategies, it's likely to fail, because for a strategy to prove its results, it needs some time for a series of trades. So I would advise you that if you really love this one, you have to focus on it alone. By that, you actually see results out of it. In conclusion, follow your plan without deviation, distracting thoughts, or hesitation to act. To have an edge, you have to focus yourself on those pullbacks, because it can be a strategy that can be enough for someone to trade even in a long term. So on that note, thank you for watching. Like and subscribe, and check out our free signals Telegram channel. This is the link in red.